This is the daily fiscal pulse for the 31st of July, 2026. We're working with Friday's settled data here, so everything you're hearing is final, not preliminary. Let's start with what's moving the broader conversation. AI and tech are completely dominating the landscape right now. The narrative centers on commentary from the Hugging Face CEO about China winning the AI race and their dominance in open models, and that's clearly influencing how traders are positioning. Of course, headlines drive sentiment, but the flows tell a different story. Let's dig into those. The net fiscal transfer for the session came in at $132.0 billion, and what's noteworthy here is the acceleration we're seeing in spending patterns. Interest payments are front and center, contributing $30.7 billion to that total. The price action is echoing the same message. ES futures closed at 7,520, which still sits below the 20-day moving average of 7,522. Over the past 20 days, we've seen a 282-point range, and the trend within that range is pointing downward, so flows and prices are aligned on this narrative. Pull back a bit and the momentum becomes more obvious. Government spending over the last 5 days has averaged about $25.0 billion daily. Put that against the 20-day average of $11.9 billion and you see real acceleration. More cash is flowing into the broader system and eventually into household and market channels. Year over year, the picture reinforces itself. We're at $1,457.4 billion in fiscal spending for the year to date, which represents roughly a 10% increase from the same period a year ago. That's material support for overall market liquidity. On the positioning front, fiscal conditions aren't offering a decisive directional signal right now. Our conditions gauge sits at +20. That said, history matters. We've observed similar setups repeatedly, and despite tighter liquidity conditions, the S&P has still managed to average roughly +2.5% over the subsequent month. Price movements don't always track liquidity linearly. Markets frequently advance despite it. One thing worth highlighting on the positioning side is that leveraged funds keep adding to their long positions while margin debt sits at the 100th percentile. That's a warning sign more than anything else, historically speaking. Tying this together, even with AI and tech capturing all the headlines, fiscal flows are providing a genuine cushion. Negative headlines get absorbed easier when liquidity is being pushed into the system by the government. We're also in the second consecutive day of rising fiscal transfers, and our work shows that pattern has historically preceded near-term upside in ES. It's not certain, but it's a pattern we monitor closely. There's some scheduled activity ahead that could reshape things. The SSA payment cycle arrives on the 12th of August, the second Wednesday, which tends to affect short-term flows. Around the 15th of August, we'll see another major Treasury coupon interest payment window. The fiscal tailwind is gathering momentum, and the data suggests there's more to come. The real question is whether markets will get ahead of it. That's our focus right now.